Hey everyone, Brian Hoops here with Midwest Market Solutions. This is our Market Insider webinar. It focuses on the quarterly stocks and acreage report that came out earlier this morning. It's Friday afternoon, early evening on June the 28th. It's just a wild trading session. We're going to look at a couple charts here to kind of illustrate that, as well as some of the fundamental news and information that took place in today's trade. Make sure you follow us on Twitter at Midwest Markets and go to our website, MidwestMarketSolutions.com. I know a lot of people want to know how the report came out. I always record a morning or market minute commentary, usually in the morning, sometimes near the midday time frame. Today, definitely did that following the release of the report, gave a real quick snapshot of what the report had to say, and that's a great way to catch up on things if you just need some quick information. Also, follow us on Twitter. We put out market information today, as well as our text message service. So all those services are available free of charge. You just want to make sure that you're aware of it. We do these webinars for our clients and for everyone on the web that wants to partake in them, as we try and give you some good ideas of what markets will be doing or what they have been doing, what we can expect in future reports. And we're going to talk about that here because we knew going into today's markets that it would just be a wild trading session. We only have a quarterly report 4 times a year, so we know that they're going to be very volatile. And this one was no exception, as we saw limit down corn for about 15 minutes and sharply lower wheat prices along with the corn market. We're founded in 2002, have 12 licensed brokers and offices in 10 different states there that are listed, and we clear through R.J. O'Brien out of Chicago. That's the oldest clearing firm of the CME, founded in 1914. I did a TD Ameritrade network interview this morning, live from our office, and that is available on, I put that out on Twitter. It's also available on the TD Ameritrade network site. Was on RFD TV this morning, just after noon, talking about the report, and as well as doing the Minneapolis Grain Exchange conference call. So it was a busy media day, let alone all the market activity. All right, let's dive into this report. As always, if you have questions about our services, reach out to any of our offices. I know they'd be glad to talk with you. Big numbers here, I thought, came out of the Acreage report. The number here, apologize for that. Let me go back. Okay, apologize for that. Acreage report, 91.7 million acres of corn seeded. That's well above the average trade guess. In fact, the range of estimates here were much lower rather than to the upside compared to the average trade guess, but there was a few guesses that called for an increase in corn acres. We have been saying, thanks to our clients that have been telling us that they were taking advantage of this higher corn prices to go ahead and seed more corn acres. So seeding more corn acres than what the average trade guess was, I don't think is unexpected, but just how much more was the big surprise. Trade was looking for a 6.1 million acre decrease, and we did not get it. We've got about a million acre drop from the March number. And you look, compared it to last year, I don't think anyone believes that we're going to plant 2.6 million more acres than we did a year ago of corn, given the record delays of planting, the late nature, and all the wet conditions. I think this number is subject to change, but right now it's what we have to work with. The July supply and demand report will reflect these corn numbers as well. Soybeans, this was also a surprise, 80.04 million, a very bullish surprise. The conventional wisdom, I think, has been that if we plant less corn, we would plant more soybeans. That's not necessarily the case because of prevent planting options. In fact, soybeans had not rallied to keep up their price end, and we did not respond to it. If this is accurate, 80 million acres is well below the average trade guess, well below March numbers, and well below a year ago. We lost over 9 million acres from last year for soybeans, and that's pretty unprecedented that we'd have that much of a drawdown. Really, that's what we need to get our ending stocks down, is exactly for this to happen. And I think this is somewhat bullish for the soybean market. Wheat, not much changes to the overall numbers here. And remember, we only had acreage and quarterly stocks. And we'll look at the stocks here in a second. All wheat acres, this is the lowest since 1999, 45.6 million. Right in line with the average trade gas. Just down slightly from the March number and down from last year. Spring wheat acres saw the biggest drop. Last year at 13.2, we're down to 12.4. That's about 400,000 less than the March number and more than expected. So this number is a little bit friendly. Winter wheat numbers pretty much in line with what the USDA said last March. No major changes. Cotton acres, oat acres, rice, all these other markets pretty much in line with what we were expecting going into the report. The big shocker here was, of course, corn and soybeans. As far as the quarterly stocks numbers, I think this is what the market traded at first. If you watch the corn market on the opening, we rallied hard, about 12 points, then pulled back and dropped quickly 20 cents and then started to rally again. I think they were trading these quarterly stocks numbers, which were bullish. 5.2 billion bushels of corn stocks, below the average trade gas and below last year. When I say bullish, let's put this in perspective. This is one of the largest in history trailing last year, one of the largest in the last 30 years. Meanwhile, soybeans, this is an all-time record. Look at compared to last year when we had big numbers, well above that, but below the trade gas. And that gave us a little bit of a pop on the opening. Same thing in wheat, below the average trade gas, below last year. So these numbers here, the quarterly stocks numbers, they're not bullish, but compared to the average trade gas, it was enough to give us a little bit of a bounce early in the day before we settled into focusing on the acreage numbers. Let's look at corn, and there just isn't that many sheets or balance sheets that I can show you here. This is what the USDA said, state by state breakdown, the change from the March report and the change from last year. So you look at these change from March, who would have added more corn acres and who would have decreased? Well, Kansas picked up 200,000, but Illinois lost the same amount. Kentucky picked up some acres. Missouri lost 100,000 acres, and Nebraska gained 300,000 acres as they had pretty good conditions. Nebraska lost some ground. Iowa was unchanged. Indiana was unchanged. South Dakota had the biggest losses here, and our office in Yankton has been touting how wet it is and how miserable the conditions are in South Dakota for quite some time. And overall, USDA said we lost about 1 million acres, almost 1.1 million from March. I think these are subject to change when we start putting the prevent planting acres in. The USDA did say today that they will resurvey producers, and that report will be released on August 12th. I believe on August 14th, we get preventing planting acres report as well. So what does that do to our corn balance sheets? Well, this is going back a few years here. This is what the USDA said, this column here, in June. This is what they will likely say based off of these new harvested and planted acres. So if you bump up their planted acres and leave the yield the same, and everything else pretty much stays the same except carry-in. When you look at these quarterly stocks numbers, while they were bullish compared to the estimates, they actually reflect a small increase in the carry-in number, and that's a little bit negative as well. So if the USDA is accurate, they went from 1676, they're going to jump it back up to nearly 2 billion bushels. This is my estimate, our estimate from Midwest markets. We think the acres are going to be down again. At some point, we're going to reduce these acres, maybe prevent plant. And also, I think this yield estimate's too high. 165 is probably too high. We're just off to a very poor growing start here, but you know the main growing season is ahead of us. We've got all of July, all of August, September. We can make or really break the crop yet. So this number, I think, is what we'll start trading, subject to change. If the weather's good and we have these type of acres, we're going to see some pressure against prices. If the weather's bad, no doubt we'll knock some of these yield numbers down. I did the same thing on the ending and usage. I've got a little bit less usage than what the USDA does. I think they're a little high in their exports, but 1.6 billion bushels of ending stocks is what I'm coming up with. Not much different than what the USDA said back in June. A little bit snugger. I think the yields are down. I think the yields could be down even further going forward. Let's look at soybeans and our acreage change. This is some big changes in here. Remember, this column is from March of 2018. We lost over 9 million, and from March of this year we lost 4.577 million. Almost all states are showing big reductions. Again, South Dakota, the leader as far as reducing acres planted, 800,000 soybeans. North Dakota, also 600,000 soybeans. Then you've got Nebraska losing acres, Missouri, Minnesota losing 400,000. You jump to the I states, Iowa, Illinois, Indiana, all losing several 100,000 acres of soybeans. And when we start talking about losing some of these acres, it's very possible that we are going to lose these. I had estimated that there's about 20 million acres of soybeans unplanted when the survey for today's report was taken. So there's a lot of soybeans to be planted. Not a real surprise that they dropped acres. I think it was an extreme drop, of a large drop. And let's look at how it reflects the balance sheet. Planted acres back here, and this is the June, this column here is June, what they had said as far as yield. No reason to change that, I think, at this point. If anything, it's probably a little high, but it is down from last year already. I think you're going to see planted acres pick back up a little bit versus where we're at currently. And it's going to put your ending stocks back up in here in this 800 to 1.1 billion bushels. Either way, even if the USDA is right and we drop 80 to 80 million planted acres and we still grow a decent crop, we're producing 3.9 billion bushels of production. We're barely using that much, and our ending stocks shrink, but only to 836. So this is, this acreage number, when you put it in this perspective, this is friendly to prices, no doubt, but it's not outright bullish that we're going to trim stocks numbers down in here to, to this 5 or 7% stocks to use ratio. We're still near 20% stocks to use, no matter how we cut it. We can absorb a big reduction in yield and in acres. So we're going to get back to trade and weather here in the month of July. Other spring wheat acres, top line here, 400,000 acre change. North Dakota, South Dakota, your two main culprits, almost account for the entire amount of the drawdown. And same thing when you look at compared to last year. Montana lost a few acres as well. Winter wheat planting acres up from March by 274,000. No major changes. Kansas up 100,000. Oklahoma 100,000. Number one, number two winter wheat producing states in the U.S. Yields are going to come in well there. And so if you start throwing in some numbers, you're looking at USDA said ending stocks 1.141 billion bushels. We're going to hover right around that, whether you use the USDA figures of a little bit lower yield or mine of a little bit higher yield. You're coming in here over a billion bushels of stocks for wheat. And look at the stocks to use ratio, 55, 52%. If even back here in when we had better prices, we're in the 24, 29% ratio. We really need to get these stocks numbers down to see much in the way of higher wheat prices. So it really looks like soybeans and wheat are going to struggle here despite the big acreage drop. We're going to really struggle, I think, with soybean prices. With wheat, same thing. The corn market, it's very vulnerable to poor yields. If we have a poor yielding crop, we'll definitely see much higher prices at some point down the road. As always, if you have any questions, please reach out to me. You can give me a call or email me. Be glad to talk with you. Otherwise, thank you very much for your attention today. Look for more volatile trade in the month of July. Certainly June was volatile, and we expect more of the same going forward. Have a great weekend, and we'll be back Sunday night with our Market Insider weekly newsletter.